Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is going to be an interesting stream. Let's just start with it right there. We're going to recap. We're going to go ahead and recap last night's not State of the Union address, address to joint session of Congress from Donald Trump. We're also going to talk about the media coverage, and also we're going to look at some absolutely insane and crazy markets right now. I'm not going to sit here. I'm not going to lie to anybody. Right now, the entire world does not know what the heck's going on. They're worried about tariffs. They're worried about wars. They're worried about Fed policy. We've got the ECB meeting tomorrow. We've got the Euro USD just on an absolute crusher rally. We've got the dollar index falling out of bed by another percent. The bulk of this news, the bulk of these moves, and this news is Trump. Is Trump. Bottom line, I mean, we're talking tariffs. We're talking really a shakeup to the world order. And, you know, before we get too deep into this, we'll talk about where we were last summer. I'll give you just some examples of some success that I had in the markets and some strategies that I was using that really were killing it back last, June, July, August, even through September. But since then, once we got into the election, things have changed. And what we have to do is we have to adjust our thinking. We have to say, okay, maybe the target markets should be different. Maybe what we should be doing is a little bit different, at least from a macro perspective. So right now, swing traders typically don't have as much pressure as intraday traders. They don't. Right now, swing traders have ulcers. They can't figure out, can I hold a position overnight? Can I hold a position for 2 days and still be okay? And that really is what this entire game's about right now. It's, if you've ever played poker, I mean, do we keep paying the antes? Do we keep staying in these positions? Do we keep waiting to get the moves in our favor? Or do we just fold and go home? It's a tough call. It's a tough call right now. Even veteran traders that have been in it a long time. I'm getting a little bit long in the tooth myself. I've been in the market a long time. And even, guys like me are just like, wow, I mean, the news is coming out so fast and so furious that it's really difficult to get a read on much of anything. So we're going to go through some trade ideas. We're going to talk gold. We got a gold trade that's live right now. We've also got the US 100 trade is still live, but it's a gut wrencher. So good to see everybody. T Marina, always a good time. Dragon 131, good to see you. Good morning from Colorado. Well, good morning. Good morning from Montana. You're almost in my region, I'd say. I'm trying to think the last time I went to Colorado, I just flew through Denver's airport, and that thing's huge. Absolutely huge. JC, good to see you, Jay. Mark Corp, good to see you guys. Okay, let's go ahead and get started, get rolling. Start off with our news feed. This is it. We're not going to go too deep into it because nobody knows what's going to happen, but this is it. If you're looking for the number one market driver in the world right now, it's tariffs. It's tariffs, it's trade wars, it's sentiment. There's a lot of headlines that are breaking all the time. Hope for Canada compromise. I imagine Canada's going to come to the table relatively quickly. Remember, Trudeau is sort of a lame duck prime minister up there. He talks tough, but they're up for an election here relatively soon, and he also has resigned the leadership of the Liberal Party there, and his successor is supposed to be chosen here, any time. But then again, who knows? I mean, who knows how these folks work? He's still in there, so there you go. But I think they've got a lot to bargain with, but I don't necessarily believe that they're going to want to take this one to the mat. China, on the other hand, is going to go ahead and they're going to stick this out just like they did in Trump's first term. This is the fascinating headline right here. Trump says a little disturbance from tariffs is okay. Last night during the State of the Union address, or the joint address to Congress, this was the headline that jumped off to me. He says, well, there's going to be a little disturbance. Now, if you followed Trump and watched him as much as I have over the past 12 years, I will tell you that very, very rarely does that man say anything negative ever about the economy. No way. No way. So when he says, well, it might be a little disturbance, that means we're going to see a major pullback. And I think that it's coming this spring. I have no question about it. And right now the markets are sort of showing us that the level of indecision coming from that statement. That was the one that really jumped off the page at me. And then you can see markets start pricing in weaker earnings. Now, one thing I'm going to say before we talk a little bit more about news, then we'll get into some trade updates and things. These outlets, I don't particularly care for NBC. I don't care for really any of them. This one's free. This is why I use it on the live stream. And this sort of is the industry standard when it comes to mainstream media financial news. You've got CNBC, you've got Bloomberg, you've also got Fox Business. Now, I can change it up just because, believe me, I'm not running with NBC, and I'm not pushing their wares. Some of the most biased reporting you'll ever see comes out of these outlets. But right now, I'm watching this saying, okay, what are the headlines? And these are the headlines. It's tariffs. And you can check any channel. They'll tell you the same thing. Now, 7 takeaways. This is PBS News. This is an agency that they're looking to cut in the federal government. So you can expect expect that this is going to be written with a little bit of a critical tone. It really will be. And right here, you can see all these headlines and all this stuff. Lily, good to see you, Lily. Charles Wyndham, morning from Texas. Right on, Charles. Good to see you. So you can see all this stuff. Trump warns on Zelensky. He really didn't last night during the speech. Admitted he read the guy's letter that Zelensky wrote, said he's ready to sign the deal. We're going to see. He didn't really warm to him, though. I don't know that there's any getting back in his good graces after Friday. Soaring prices of eggs on Biden, not bird flu. Well, I mean, Biden had the birds killed here in the United States. We all know that. So let's just keep on moving. Musk is always a big deal. He's going to be in the headlines, but this is the one we want. Now, remember this. No matter if it's conservative, liberal, middle of the road, guys like me out here trading, tariffs are it. Trump presses forward with the tariff fight. That is it. That's our number one market driver right now. We've got tariffs number one. We've got Russia-Ukraine number two and a possible peace deal. Now, you'll notice that Israel-Hamas is taking a back seat right now. Even in oil prices, we're looking at oil right around $66. That's an absolute epic plunge. We're going to talk oil here in just a minute. All right, that's enough of the news. Let's go ahead and get out to price action and some trade ideas. This is one that we've really been nursing, and I mean, I call it my pet rock because nothing's happened. I keep staring at it. I stare at the charts, and nothing's happened yet. You can see right here, our key level was 20,330, and this was the actual trade. US 100, we were looking to bid, 20,375. Right now we're trading 20,411, and this has been a rocky road. Now, we're looking for a bigger move here, but full disclosure, this thing has traded positive. Right here was just an initial approach. Then we had a real nice trade right there that came up, and then you came down, sort of washed out those longs, and then we went right back up here to this level, and now we're getting sort of a strong bullish open. I would say right now that second 30 minutes is definitely kicking in, and you're seeing prices drive higher. Still, though, it's our pet rock. It hasn't done anything. It's right around entry point. That's not good enough. I'm watching this closely. In my personal opinion, I don't believe this is the time to be a hero and hold positions, especially with this news cycle. But we have to recognize that, yeah, we're still in it. We haven't been stopped out. Go back and check that trade ID out. If you're watching on YouTube and you're brand new, howtotrade.com, swing into the trading room, sign up. You'll get the analytics thread. Follow me. You'll get these trade ideas beamed out to your email box when they come out. And we've been doing one pretty much every day. A lot of them haven't come to fruition. Great January, mixed February. Right now, March, we're off and running and feeling pretty good about things. So I'm watching this closely, and you can see we're getting our rallies. So we're up about 75 points. And realistically, I would say we need to go up here and really touch 20,900 or 21,000 before I would consider this even remotely worth the time. But we've got a shot. We're still in it. A lot of tariff talk, though, guys, and it's absolutely driving sentiment, every which way but loose. This is a trade that we had on yesterday. This was a 920, and it's looking pretty good right now. But about an hour ago, it wasn't looking so good. This is I got a great question from somebody that watches our streams. The gentleman said, "Hey, listen." Left a comment on one of our YouTube videos on how to trade calm YouTube. Said, "Hey, listen, you're promoting the 5813 EMA. What, did you just abandon the 920 EMA?" And I said, "No. We put all those strategies out on the channel and in the trading room. We have a bunch of price action strategies in the trading room, and every video we put out on YouTube that's a strategy video is designed to get you guys thinking." The number one question that I've received, all the other coaches that were here before me and that I worked with, the number one question we always received was strategy. Now, here's the thing about strategy. There's 10,000 of them. There really is. Maybe 25,000 of them. Who knows? The biggest thing when you select a strategy is you have to pick something that's intuitive to you. It's something that makes sense to you. So when we put out a wide range of strategies, I really don't want everybody to sit there and watch these videos and watch a channel going, "Oh, Shane's trying to be an influencer. He's showing me exactly how he trades." No, not necessarily. The Fibonacci's are how I trade. That's in the trading room. You can go to Fibonacci Counterpunch series. I made those videos 2 years ago, 3 years ago. They still hold up. That's still what I do. Now, these crossover strategies, we've had a pretty good run of trading them profitably on a live stream. So when we do a workshop or something and we trade these things, we have a pretty good chance of getting on the right side of the ledger. Now, it doesn't mean that I'm sitting around trading a 5813 over a 920. This was a trade that we looked at yesterday. It was a 920 EMA on gold with RSI confirmation. RSI is beneath 30. That means we got to buy. There's your crossover. Bang. 9 crosses over the 20. That's your entry. We've got a couple options on entry. I just bought it at market. At market would have been right on this 4-hour bar's close. Okay. We also made a video how to use Fibonacci retracements to improve your 9 EMA entries. You can do the same thing with the 920. Draw a nice ratio. Maybe wait for a pullback to your moving averages before you go long. This was the trade that we built, though. We said, okay, listen, normally I would have my stop loss down here beneath this swing low. But if we did that and we bought, say, 19 or 29.13-ish, if we did that and we risked 28.29, I mean, it's just not even a feasible trade. You're risking $100, $100 of actual spot gold pricing. To dial that in with your leverage is going to be really difficult. Not many people have a big enough account to do that. The big money players do. We don't. In any case, right there. So I said, listen, probably just put this thing a few pips beneath this 4-hour bar and just look to get in on the uptrend. Well, right here, we got a bit of a rally, and then we came back down, and this was real ugly earlier. Now we're starting to stabilize, but I have to tell you, this just is textbook compression. It's going to be a tough trade to win because you're going to have to get a big break. You're going to have to get a big break right up here to 30,000. We're seeing that compression. It feels to me sort of like a bullish pennant, meaning I sort of expect us to go higher, especially if the dollar keeps getting absolutely smashed. Now, the DXY, just sort of just tie this in, sort of dovetail this. This is horrible stuff. I mean, if you're long the U.S. dollar, which I pretty much have been, just saying, hey, listen, we've got higher interest rates. Higher for longer is going to be the mantra here in the United States. You've also got a situation where these tariffs are liable to make the U.S. dollar stronger. Why? Well, think about it for a minute. What exactly is happening? You're pricing out all your competition in the United States. That means if you're going to start building things in the United States and you're not too worried about your export sector, which we're not right now if you're putting tariffs on it that big. Reciprocal tariffs, April 2nd, was announced last night. That's huge. That means places like India. It means places overseas that really put those high tariffs on, they're going to get reciprocal tariffs placed on their imports. As you go into protectionism, you sort of expect a stronger dollar. That is not what we're seeing. Where the dollar's getting absolutely crushed. You can see on this 4-hour, this is a 5.813. There's your cross under, and you can see, I mean, if you got that one, you're doing very, very well. So believe me, there's many ways to trade. The 5.813 I really like for shorter time frames. That 920, though, that 920 is pretty darn good. It's a pretty darn good strategy because if you pick the right time frames, you have a chance to get in on big moves. And big moves are what a lot of you really want to do. The 1 to 3s, the 1 to 4s, the 1 to 5s. For me, I'm more of a tick scalper, and we did a video on that where I showed you how to tick scalp. All right, let's see here. Lily, learning. I'm looking at the SPY and checking out the RSI on the 5-minute. I do not think it's ready. Yeah, Lily, it's very early in this session. Right now, I will show you my bread and butter, what I'm looking at for U.S. equities. Yeah, let's just go ahead and do this right now. So first thing I would be probably looking at here, E-mini S&P 500, that's sort of going to be a representative. It's a futures contract, but it is sort of representative of what you're looking to do there on your SPY. And I can tell you right now, just off the top of my head, after seeing 10,000 of these charts, I'm probably not quite. I mean, I guess a man only lives 20,000 mornings, so I haven't quite seen 10,000 of them. But I've seen a lot of them, at least probably 5,000, I'd say. Somewhere in there. In any case, this is Chop City. Look at the size of these wicks right there during the pre-market. Doji. Then you sort of get the throttle to open up. You faked out the guys that are holding shorts, and you came back down, and now we're just rotating. This is hard. This is really hard to trade. And if you're looking at a 5-minute, now what I'm going to show you here is it's going to look like the market potentially is directional. Is it really, though? No. If you wanted to maybe play a breakout, you could do something like this. Just try to get with price action. I think more than likely that's going to be a loser. And the reason why is take a look at our 30-minute signature. This is really tough. A lot of indecision. Right there would be sort of your intraday or, your overnight high right in there. It's tough. I mean, I think that we're more than likely going to rotate. I want to see this 30-minute chart break before we start talking about maybe picking a direction on a 5-minute. So where a lot of traders get into trouble, they start doing stuff on real short time frames and compressed markets, and it's almost guaranteed to lead to some real tough trading. Although right there, 57.99 and a quarter, that was money in the bank for a Fibonacci scalp, at least for 4 or 5 ticks. So I'm pretty confident we're going to trade down from here, probably down to this 62%, but maybe not. Maybe we break to the top side and we get a little bit of action here, but very, very flat right now. Bullish nor bearish, I have no opinion at all. No opinion at all on U.S. equities today. You're starting to see a little bit of puff come back into the Dow and the S&P and the NASDAQ, but we're sort of net long the NASDAQ. We're getting a little love there. I don't know, guys. I think that this could be a real problem. Yeah, right. No conviction. Absolutely, Lily. I mean, if you could see that, if you're seeing that, then you're in great shape. A lot of traders don't. A lot of traders will do things like this. They'll go to a 1-minute chart exclusively, and they'll say, okay, well, we're bullish, right? No. There was your big sweep higher, and now we're just milling around. This Fibonacci retracement's highly suspect because it's on such a short time frame. If I was going to bid this thing and I was serious about it and wanted to lay down with some conviction on this chart, I've got to see a move probably down to 78%, right down near the bottom of the U.S. range. And you probably could make a stand from there and be okay. But I have to tell you that this just isn't good stuff in my opinion. That's just my own personal opinion there. So that's a good look at the S&P. All right, guys, if you want to trade any of these markets, be sure to go over and check out Switch, switchmarkets.com. Double your deposit with a 100% credit bonus. They've got all sorts of nice features over there, giveaways. I believe they have a new contest that just came online. I'll double check that tomorrow, but I believe there's a new trading contest that just kicked off yesterday or the day before. Jeez, it's already Wednesday, so I think it kicked off Monday. But you definitely want to check out Switch. They'll get you up and running with your favorite markets. Okay, week 10, it's this simple. EIA ADP employment report, that's what we're going to cover today. The EIA crude oil inventories report is going to come across the board here relatively soon at about 8:30. So if you're trading the EIA crude or if you're trading WTI crude, you need to be very, very careful with what you're doing right now because it's going to, I won't say, YouTube doesn't like you to say bombs, things like that, but really a bomb will drop on this market here in about 13 minutes, excuse me, and you'll see really a tremendous move in WTI crude according to the volatility and the implied volumes that'll flow into the market. In any case, what I do want to cover right now is going to be our ADP employment report. Now, this is key. Remember, Tuesday, Wednesday, Thursday, psychology. We are trading and we're going hard. If you're going to go hard now. Tuesday, Wednesday, Thursday, that's when you want to trade. That's when I'm shooting for my P&L. That's when I'm trading my plan aggressively. If there's a trade there, I trade it, and then I'm looking to build the account. I'm looking to make money. Hey, listen, I'm going to be real honest with you. I take it slow on a Monday. I want to go hard Tuesday, Wednesday, Thursday, and I want to slow it back down on a Friday just to get into the weekend. And as many profitable weeks as I can string together is the goal. That's it for me. That's how I judge my performances on a weekly basis. Now, news of the day today, a couple of things we need to look at here. MBA 30-year mortgage rate, that's huge. Look, it's 6.73%, down from 6.88. Now, Trump did mention in his speech last night, he was very pleased with what happened to interest rates yesterday. We saw sort of a pullback in the bonds market. Interesting. We haven't seen a lot of that, but take a look at that. 6.73, that's down about 0.25% over the last 4 weeks. That's key. That really shows that U.S. dollar is weakening. So maybe somebody knows something. Maybe somebody thinks a rate cut's coming sooner rather than later. The inflation numbers are still really high. I think if you're betting on rate cuts, you're going to get sucker punched. I really do. MBA mortgage applications, though, you can see those sprung to life right there, 20.4%, up from -1. Those had been way down. But remember, it was the winter months here in the United States and really in the Northern Hemisphere. Typically, you don't see those mortgage applications come across the board in the winter months. It's just something we're going to have to watch. But as mortgage rates come down, you will see more mortgage applications. Geez, say that 3 times fast. And that really will be sort of seen as a driver of economic growth and prowess. Me, I'm not convinced. ADP, non-farm employment change. This is the big one. 77,000, missed expectations badly. 141,000, 186,000 was the previous, which was revised up. Here's the thing to remember about the ADP. It does not reflect NFP. Now, we're going to do NFP live for you bright and early Friday morning. It's going to be a pretty good stuff. I always like doing NFP because there's a lot of action. We'll scalp it. We'll do all sorts of things live and break down the action. But this number right here missed badly. I'm fully in the camp saying you're going to see a terrible jobs numbers Friday, a terrible one. And the reason why is because you've seen a lot of layoffs at the government level. You've also seen a lot of resignations really at the federal level. All that's going to figure in. You've also seen a lot going on in the migration department, the immigration department, a lot of deportations, a lot of self-deportations. What does that mean? It means our workforce is going down. It's just what's going to happen. So we just have to be ready for it. For me right there, that was a very weak reading. We're reading a lot about it in the financial media. Don't get too carried away with ADP, though. Employment down. Private businesses in the U.S. added 77,000 workers to their payrolls in February, the smallest increase in 7 months compared to an upwardly revised 186 in January and well beneath forecasts. So there you go. I mean, you've got supposedly a softening jobs market. This last year, employment is down. Okay, well, that's fantastic. But people get carried away in this. Just like we looked at a 5-minute chart, this is 1 year. Okay, you can see employment's way up here, way up here. A lot of those are federal jobs. Of course, now you're seeing those are coming down. That's just the way it is. It's the way these numbers work. But take a look at really what's happened. Where are we at? You're right around the baseline. I mean, there's your COVID craziness. There's the rebound, and you're well above zero, and then you just flatline right in there. There's an old thing they say, in policy. That's in policy. I see absolutely nothing wrong with that today out of the ADP. It's low. Yeah, it's a little bit low. We're gonna see a string of numbers that aren't going to be very good, and I'm curious how the market's going to take the medicine. I don't know. I don't really know. Like right now, we've seen the U.S. 100 just fell 150 points since the last time we looked at the chart. Markets are very, very sketchy right now. So we could easily see a turnaround and get hurt really bad on that trade. But as long as you have your stop loss down, that's life. You got to account for this risk before you get into the trades. All right, WTI crude's a mover and a shaker. Unfortunately, we missed our trade idea, which was a 71 sell. Was very confident about that. And you can see the rally that we got 2 days ago. The high was about 70.56. I believe we were selling 70.75s. So that was a near miss off of this reversal. One thing I will say is our 13 EMA, my compliments to the chef, 70.52. That held absolutely beautiful. And that's why I love the 13 EMA. It's my favorite. 13 EMA holds firm. And now you've got a major, major bearish breakout. So if I'm looking at U.S. oil right now, I don't recommend trying to scalp this on, say, a 5-minute chart because we do have the WTI numbers, the EIA numbers coming out here relatively quickly. But you can see that's sort of an according to oil downtrend. This is when the volume typically picks up right around 7 a.m. my time, 9 a.m. Eastern. And you see we're still very early in the session, but this is looking like a trend day. We're down almost 2.85%, 2.86%. A lot of that you could probably say about the energy talk last night at the speech. And what do you got? You've got a market in a free fall. So I'm going to show you this level one last time because we are getting pretty close to it. Or I won't show you one last time, but I'll just show it to you again. You guys are tired of seeing it. Those of you that watch this stream regularly, this is sort of my forte. I'm a crude oil specialist. The market is missing it. They're missing the mainstream media is missing it. The technical analysts are missing it. The true price of crude oil after COVID was negative $40 a barrel. That's what it went to in April of 2020. Now, if we just do a ballpark there, what are our levels? 65. 65 is a big deal. No question about it. Now, you see, we've tested this area once, twice, 3 times, 4 times. This is the area. This is the game, guys. If you're trading WTI crude and you're holding longs, all right, if you're holding longs, as soon as 65 breaks, get the hell out. Get the hell out. Because this thing won't just drop a little bit. It'll crater. And as soon as you start to see WTI cratering, you're going to see victory laps out of the White House. You're going to start seeing a lot of the pricing on everything from airline tickets to the goods at the grocery store. They're going to start going down. Now, it won't necessarily happen overnight, but it's going to happen. Now, if 65 holds, and there's a lot of scenarios where 65 holds, we could have fresh, if the UK and Germany, or if the UK and France put boots on the ground in the Ukraine, that's a major escalation, a step towards World War III. Crude oil will stay right where it's at. Now, what does the tariffs mean? Now, that was the big threat out of Canada yesterday was the tariffs. Or we'll cut off your energy. We're down to 2.75%. The United States takes 90% of the exports, the energy exports from Canada. Crude oil is getting destroyed. What gives? Because there's a wave of crude oil getting ready to hit the market, and most traders are already pricing that in. No question about it. But we haven't really done anything yet. 65 is big. Once 65 breaks, short the whole way. Short the whole way. Until it breaks, I'm not really too interested in taking a long here. Really, the level that I've been pointing out, though, let's dial this in, see if I can get it. Let's see. Perfect. Right around 40, somewhere down in there. really right around between 64.50 and 65 is fantastic downside support. Once this zone breaks, once you see a decisive move, maybe a daily close beneath 64.50, then you really got to start thinking about the downside of this market. And it looks to me like that's developing. There's a lot of people in the White House that are happy right now with that crude oil price being where it is. It's going to go lower. Now, the question is how do we get there? I don't know. But the last thing I'm going to say about crude oil is this. You've got the dollar index is off almost 1%. You've got U.S. oil off almost 3%, 2.67. Typically when the dollar falls, commodities rise. Why? Because it takes more dollars to buy that commodity. It's not happening. That means that there's a disconnect there between your commodity pricing and the U.S. dollar, specifically energies. There's folks that are betting the ranch that this thing's going to crater. I don't know. If I knew, I'd be betting the ranch too. Or I'd go borrow a ranch and then bet it. In any case, that's my look at WTI crude. Don't trade it right now. 826 my time. That number is going to drop here in the next 30 or next 4 minutes. I may in fact just cover that straight up. We'll even put up a 1 minute chart here. Maybe I'll hang around and cover that live. That might be a pretty good idea. Right there, U.S. oil, 1 minute chart. There it is. We'll see what happens. Let me go ahead and pull up the EIA number here. All right, we'll go ahead and cover that live. When that thing drops in 4 minutes, we'll do it. Why not? That's what I say. Why not? Okay, but that's what we're looking at right there for WTI crude. You can see our pet. This isn't our pet rock. This one's actually doing pretty well. This gold trade holding on, a little bit of compression. We're sort of waiting for the big move north. I mean, do we make a run at all-time highs? Potentially. Remember, we have a trade idea that's short right up here from underneath 3,000, a pretty darn good short scalp. If I was long this play here, you probably want to stop yourself out, or take profits, even up at 56, somewhere up in there, 40 or 50. That's a pretty doggone good area to be taking profits. I'd probably be looking at doing something like that. If you get the runner, if you don't get the runner, then probably going to get stopped out. Euro USD, this is another trade idea that I've been looking at. We talked a lot about 38%, and let's just dial this thing down to a 30-minute chart. What do you have? Not much. We went right to 38%, a bit of a pullback there. That's 50%. Right here, 38%. We just broke clean. We had a nice proximity test right up there. The high was 105.59, and we were right up there at 105.70. You got a nice pullback there. Second time through. This came yesterday. We just saw the U.S. dollar fall out of bed and the euro rally. Remember, the ECB is going to speak during the U.S. overnight. They're going to make their latest interest rate decision. They are expected to slash rates. So if they're going to slash rates, be ready for anything in this euro USD. As far as what I would think, I'm still not bullish this market. Maybe I'm just stubborn. That could be. I do believe that you're going to see a resurgence here of the dollar against the euro. I think this is a short-term correction. Be that as it may, we have to respect price action, which way it's going. But I do love that 62%. Those are my two favorite areas to trade. Is going to be 38 and 62. I'm also pretty fond of 78. But as far as what should we be looking to do here? You can already see that your weekly range, you're up almost 3.5%. This is an outlier. This is why they make stop losses. You just rip the Band-Aid off, move on to the next trade. But right now, this monthly action from this double top right up here, this spike high back in September, down to this low in January, something like this. A little bit of a retracement, 62% up there at 108.17. Yeah, you're probably selling 108s. 108.09 if you want to be real specific. If you want to be aggressive, you're probably a seller at 108, just because we do expect a little bit of two-way action right at that key zone. So I'm watching that closely. I think that this is an absolutely huge breakout. Early March, a lot of people are taking positions against the U.S. dollar. Maybe somebody knows something. Maybe somebody knows the Fed's going to cut rates and they're not supposed to. Who knows? I don't know. Nobody knows right now. Right now we're trying to price the impact of the tariffs and the evolving geopolitical situation. That's the bottom line. All right, let's see. We got 1 minute left here. What do we got? 1 minute left until we get our U.S. oil number, 36 seconds. Remember, you're going to see a big flood of volume here, and then you're going to see a break. I'll pull up the presser as soon as it drops. We'll see exactly what the number is. Remember, with the new energy policies, we're going to start needing to see builds every week, builds in supply every week. If we don't see that, then that's going to be a real problem for WTI crude, at least in the short term. So we're watching for a build today. We need to start seeing those probably in the next 2 weeks. but it's time to start seeing builds. All right, 2-1. All right, a little bit of bearish price action there. Really not much. Yeah, see, this is almost indicative of what you see every time. That's a bit of a pump fake, knocking out some of the longs. Now you're just sort of rebounding. That's an absolutely brutal EIA number. That means that we don't have much of anything at all. I didn't see any real rush of participation there. That's surprising. Typically, these things break. They break relatively hard. All right, let's go ahead. Let's go ahead and have a look here. Look at the actual presser. Summary of the weekly petroleum data release for the 28th. Let's see. When you're reading one of these, third paragraph. Rest of it doesn't matter. Third paragraph. U.S. commercial crude oil inventories, excluding those in the SPR, increased by 3.6 million barrels from the previous week. At 433.8, U.S. crude oil inventories are about 4% below the 5-year average. So we're still lagging. We're still running a legitimate shortage, but you are seeing those builds now. 3.6 million barrels, and I believe that's, let's see. It doesn't really say in that brief, but what does that mean? It means that you're starting to produce crude oil, and right there is going to be your a little bit of a bounce. See this right here? 1 minute after the release. What is that? That's a doji. That means nobody knows what the heck's going to happen. And right now, we're waiting for the markets to pick a direction. If you're trading WTI crude, I'd probably give it another minute or so, and then we could probably get back to our basic technicals and how we want to, capitalize on this. Right now, this is a major trend day down. And the number one way that most people lose their money is they bet against trends. This is interesting right here. This would be our most recent spike high that was a little bit earlier this morning before the market opened. And you've got a 38% level right there at 66.39. That might be a decent scalp for 5 to 8 ticks. The problem you run into with trying to scalp like that on a U.S. oil contract, CFD, is you've got a 6-tick spread. So what I would be looking to do personally, I'd be right here with my April contract futures. One of the reasons why I trade futures, there's no spread. No spread. You pay a flat commission and you get to trade it. Would this be a decent trade? 66.42 I kind of like. You can step up and sell that right in front of 50s. The biggest question you're going to have is really where to start your Fibonacci's. That right there is a pretty good zone. That's a nice spike high to a nice swing low. But focus on that U.S. session, that 9 a.m. Eastern, the traditional NYMEX pit open. That's when everybody starts trading crude oil. You see the volumes there, 30-minute chart. What do you have here? Boy, you don't have much. You don't have much to work with. You got a real tight range, 66.72 to 65.93. That's not the kind of environment you want to play Fibonacci's in. I probably wouldn't be trading this, not until later today. I would want to see a bit of extension, but I can already tell you with crude oil down about 3%, do you want to sell down here? Not really. Are you looking to buy? It's really hard to buy, and unless we got a shot at 65, I don't really think you can buy either. And the reason why is you're sort of trending. You're trending a little bit here on your weekly, aren't you? That's your breakout. One of the reasons why I hate order blocks, or I don't hate order blocks, but I always laugh because I'd say, okay, where's the liquidity sweep at, everybody? Well, there was a liquidity sweep right here. All right, what was the low? 65.68. Maybe that's the trade. 65.93 is our weekly low right now. We could be going to check that out. A lot of folks would say, yeah, but go ahead and buy that. We had a demand zone and bidders there. I don't know if you do that. A lot of folks would say that's where you want to buy from. There's your swing low. That's what you want to do. 63.61. Truth is going to be somewhere in the middle, 74.50-ish. We'll be watching this zone relatively closely, but I don't put much stock in that. As a matter of fact, a low of 65.68, I would be looking at that as potentially a break point where this market would sort of compress and then launch lower. All right, guys, I've droned on long enough. I'm seeing running long every day these days. So, all right, that's about it for today. We're going to come back tomorrow. I'm going to talk ECB. We're going to talk Euro. We do have a trade out there on the Euro Great Britain pound, but it doesn't look like we're going to get it. Market's sort of rallying against us there, and we had an entry point that was down near some yearly lows. We've also got an NFP preview. Remember, tomorrow's Thursday, Friday, NFP Live. We're going to go ahead and preview that, get you set up, get you ready to trade, and that should take us home for the week 10 already. Unbelievable, isn't it? Unbelievable. All right, guys, I'm going to sign off for a while. You have a fantastic trading session. If you're a crude oil trader, be careful. Be careful. If you're any kind of trader, be careful. Definitely want to be careful unless unless you got in on the gold long, then things are looking pretty good. But other than that, this is touchy situation. Watch your news feed. One eye on the news, one eye on your charts. All right, guys, that's fantastic stuff. Thanks for watching today. Trade the action well, and we'll talk soon. See ya.